We are back for another riveting week in the markets. Slow start today, but we expect things to pick up. We'll be going over everything that's on our mind as we head into this week and much more today on Money Never Sleeps. Happy Monday, everybody. As we get going, do us a favor, hit that like button. If you have not subscribed to our channel yet, what are you doing? Go ahead and hit that button right there, too. It's not that hard. Nothing that Kevin or I say, however, is financial advice. We're not financial advisors, so please do your own research before making any buys or sells. Kevin, we have a lot of economic data coming out tomorrow and Wednesday. We have, earnings season continuing, a potential government shutdown on Friday. We got a last Friday afternoon news dump of the U.S.'s credit rating going down. You absolutely love to see that. What are you focused on today as we begin this week with, inflation data tomorrow and that being kind of the driver for the rest of the week?
Yeah, definitely. I mean, I've been keeping an eye on what Moody said. I've seen how markets react to that. We really didn't get much of a reaction. Probably why they dumped it on Friday after the markets closed. So that's a good thing to know. But the thing that's been keeping my attention, more than anything, is just how Japan's been acting. Because we did get some information regarding corporate bonds and seeing what they were doing in the month of August, and it was one of the biggest dumps Japan's ever taken, and that was on corporate bonds for the U.S. So I'm going to pull up my screen real quick. I just want to show this and get into this because it's important to know, but it's not too much. It's not going to take up too much time. We're seeing that Japan's U.S. corporate bond sell-off brings risk of Credit Weekly. Brings risk, and this is from Credit Weekly. But this is what we're looking at down here. This is the Japanese investors sold U.S. corporate bonds at a record pace. This is back and forth percentage of what we're seeing, and we can see that they absolutely dumped down here in August of 2023. So what does this mean? Well, we do know that the Bank of Japan did intervene earlier this morning, not to a serious extent. It was just to help some of the currency because the yen was getting a little bit out of control, shot up to 152. And you can see literally on the hourly chart when they did intervene, it pulled up the yen to, I believe, 151 against the US dollar. So they are still fighting this battle with the US dollar. Obviously, this is a pain in the ass for them because a lot of this is going back to their inflation battle. But I'm just going to pull up the US dollar. You can see exactly on the hourly when it happened. Yeah, so you can see exactly when it wicked down here. There was news that they were going to intervene, but then it looks like the market just bought it right back up. And, the dollar is still trading stronger against the yen in this regard. But we do know that there's a good chance they could be going back to positive rates. So what does that mean? Well, if we're seeing corporate bonds already sell off, there's a good chance that we could see U.S. Treasury start to sell off as Japanese investors start moving money back home to see if they can take advantage of some of those higher rates that they're going to be seeing in Japan. And that means that we're probably going to see Treasury yields go up because we're waiting to see if people buy them. And that might make the equity market extremely expensive for most investors in the U.S. So it's really interesting to see how this is playing out. I don't know if the U.S. government wants to see this play out this way. The U.S. corporate bonds are being sold off. They continue to be sold off. So a good chance that we are in the middle of a yen carry trade. And, it's going to be it's all popcorn in theater at that point because this can get ugly real fast, or Bank of Japan could just kind of have nothing burger. But definitely something I'm keeping my eye on because this is really important, I think, and no one's talking about it whatsoever.
Yeah, no one's also talking about that looming government shutdown on Friday. We saw Moody's downgraded the U.S. credit this last Friday afternoon, right after the markets closed. What convenient timing for that news to come out. It's definitely just a coincidence. They didn't do it on purpose heading into the weekend and Veterans Day and all that stuff.
After that rally, too.
Yeah, exactly. So that was just a little bit shady. And like I said, we have potential shutdown on Friday. Like, there's still nothing in place. A lot can happen between now and then. But man, like, it's the same rodeo, the same song and dance, whatever, however you want to term it. It's tiring. It's annoying. But tomorrow is a big day. We see CPI, consumer price index, as well as core CPI. So we're moving food and energy, blah, blah, blah. That comes out tomorrow. Wednesday, we have producer price index and retail sales. As far as earnings go, Tuesday, Home Depot. Thursday, we'll have Walmart, Alibaba, and Ross. Wednesday, we'll have Target. So those are like a lot of big like consumer staple ones. Okay. And that's going to be a good preview, like a good view into what is happening with consumers both here and, in Asia with Alibaba. So that is going to be something that I'm going to have my eyes on with that retail sales data as well on Wednesday. We also get some tech companies, Oracle, Cisco, things like that. But the health of the consumer, I think, is really, really important at this time. We see that earnings are still up. Consumer sentiment, though, is damn near at rock bottom. One thing that is going to be, when I see a store like Ross reporting earnings, that to me is kind of like a counter indication of like, if Ross's sales volume is going up, that means people are looking for every place they can to save money. And that is not necessarily the best sign for the health of the consumer. We're heading into the holiday season. People always, I mean, what percentage of people out there really spend beyond their means when it comes to holiday gift giving? It's absolutely ridiculous. And everyone's in debt now. Student loans are back. So I think we're going to see that consumer debt continue to pile up through the end of the year. And that could give the markets a little room to breathe, but it could also just continue to extend out and kick the can down the road for the consumers to once again get absolutely crushed by debt.
Yeah, man, this inflation, I really don't know how it's going to come in tomorrow, right? Because oil obviously went down. It's going to be really interesting to see how this plays out. I think there is a case for a bullish CPI print where it looks like inflation's coming down. I'm going to go along those lines. Usually, I am counterintuitive, and I'll say that, oh no, let's see it go up here. But I think it's going to be, either a nothing burger or it's going to be a little bit down. I think the most interesting thing right now is unemployment, right? We always talk about unemployment rises into the crash, and then once the crash happens, you start to see it spike. I actually have a chart right here. I'll pull this up, and I think the unemployment data is actually going to give us the best indication of when a recession is coming. So this is from 1970 to 2023, where we currently are, and we can see that once we start to get these ticks up, we enter a recession. Like bam, recession back in the 1970s, 1980. So as we started to go up from 1979 low. Right, by the time we got to 1980, 6.3%, bam, recession. Same thing here, recession. 1980s late, we started taking up right around May, June there. And then by the time we're in July, we're in a recession. And it goes all the way here. Even in 2007, we started to take up. And then once we got to a point where it just was too much, 2007 December into 2008 January, we entered a recession. We didn't recognize one, but we were in a recession at that point. Now we can see if we zoom in here, that we're starting to take up again, right? We're at 3.5 in July. Now we're currently sitting at 3.9. The question is, are we truly above 4 right now? I don't know. I really am interested in seeing how this data comes in. We won't probably get some unemployment data for a while, next 2 weeks or something like that. But I'm interested to see how this is going to play out going into the holiday season, because we did see a ton of layoffs in the month of October, and we're getting news that we're going to get more in November. Obviously I'm anticipating it's going to go up a lot more, which is unfortunate. But this isn't good for the consumer spending this holiday season whatsoever, right? If you don't have a job, you're not going to spend money you don't have.
I'm sure they're going to push the head. So let's talk about that real quick. I'm sure they're going to push the headline number, which will not be seasonally adjusted. I don't think like they'll say like, oh, hey, look, it went down, but it'll be like seasonal jobs that, high school kids get for a few weeks around Christmas break. So I think also the headline with inflation tomorrow, like if we're looking at the economist expectation, headline number is supposed to be at 3.3%, which would be down from 3.7 last month. That's great. But if you're looking at core, that's going to be the exact same month over month, still at 4.1. So, I don't really, these days, with how much people are spending on energy and food, it's like, I get why they stripped that out, because it is volatile, but still, it does matter. It does matter. And I think if the headline number comes in down, because gas went down, the markets are going to be on fire tomorrow. Like, I think that's going to absolutely tear up. And, I know that you think that there's a good chance at an end of year rally, which for, if you have a short time frame, or if you're trading actively, maybe that's a good thing. Once again, though, I think if we're going to see, rates are not going to get raised again in December, most likely, unless we get a really bad CPI print, which doesn't really seem too likely. So I think this scenario of the Fed being done raising rates grows more and more likely, but something still could break and cause them to start cutting rates sooner than expected.
Yeah, definitely. Yeah, and again, I think the reason for an end of year rally is just because markets aren't reacting to bad news whatsoever. And when we do get really bad news, it's in the after hours of markets. And we're seeing that there's enough time where the markets kind of calm down before they open once again, right? We saw that with Moody's and the credit rating. And then we're also just seeing patterns that seem like, we could get a bullish break here. And it's unfortunate. We're only 7 to 8%. I mean, if you're bear, it's unfortunate. We're 7 to 8% away from all time highs in most major indexes. And I think people are focusing on chasing those gains as opposed to looking down at the 60% drop that could happen if, something does break and it's break severely. I was reading earlier today that bank term funding program, that's going to be, phased out in March, supposedly from the Fed. But the Federal Home Loan Bank, those are the second to last resort banks that would loan to all these other banks. That's the one that we've been using as our indicator to see if these banks are insolvent. So they've realized that banks have been pretty much surviving off of those loans. And now the Fed wants them to, be more strict when it comes to lending money out in that capacity. So they're requiring them to actually make sure that I think 10% of the bank's portfolio has mortgage-backed securities in it. Because a lot of these just necessarily didn't have it and they were borrowing it. And it was just like kind of free extra money for them to be surviving on for this period of time. So I'm really interested in seeing if that's something that could potentially break, maybe impact commercial banks. I think a lot of those regional banks are the ones with the commercial real estate are going to be the ones that are most exposed to that. But that remains to be seen. So yeah, it's very possible something could break. It's a matter of just seeing when something does actually break. But I think that there is a good chance that, like you said, if we get that nice headline number tomorrow, I mean, markets could rip. And going into OPEX on Thursday, going to be interesting to see how that affects a lot of people in the markets.
All right. That's enough for the headline macro stuff. We can dive into some charts now if you would like. We've seen alts go on a nice little run for crypto. If we're looking at the TradFi markets, some tech companies are having good days today. NVIDIA, Tesla. Why don't we look at the Tesla chart? Actually, we're seeing an almost 4% bump today in Tesla. So let's start with that one because I think that's pretty interesting.
You have 4% on the dot right now. We can see this is the hourly. Let me just pull up the daily real quick. Yeah, I mean, Tesla's a wild chart, isn't it? We got a massive gap to the upside right here, right? And that's another thing where it's like, could we get an end of year rally? Well, I mean, usually these gaps do get filled out. I don't know if we're going to wait till the next bull market to fill that out. We're closer to it now than we would be if we just went down, right? So, I mean, yeah, I think that there's a good chance that we could fill this gap 242. I mean, where is that from where we currently are? If you go fill that, that's 8%, 9%. So for a company like Tesla, where a lot of people are, always extremely optimistic, despite them dropping the car prices down and people not necessarily buying as much and having some bad earnings, it's very possible in this irrational market for it to push up to that level, right? But yeah, I mean, this is a pretty good move today, and it seems like we filled this gap down here. It just seems like we're overbought in the daily, which is, I guess, doesn't really matter at this point right now. But we can see that we're also fighting against a death cross too. So we could get a death cross rally that pushes us and prolongs this from happening. Eventually, I do think that we are going to get the death cross on Tesla, but we need to have a structure that just, when we do move to the downside and get this death cross, there's no question of it trying to pump out of one, right? We saw the death cross rallies across all the major indexes. We saw on the S&P, the NASDAQ, the Dow. We got a death cross on the Dow, and then it just turned into a golden cross right away. So it's very tricky trying to trade these markets right now. In my opinion, I think that there is a case for maybe just a bit of a squeeze that pushes up. And I think a lot of people were probably shorting Tesla when we had this massive gap down here on October 20th. By the time the markets open next Monday or whatever it was, or Thursday, it was a Thursday, my bad. That's maybe people were trying to short that there. So what we could be seeing, I think we're seeing across a lot of these indexes, are shorts that are being covered, meaning the price is pushing up and they don't want to get liquidated, so they have to buy back those stocks, and that naturally brings the price of these assets up with it, even though people aren't necessarily bullish on the asset itself. It's just buybacks bring the price up, and then it's short positions are being closed. It's the way the game is played. But for Tesla, very good day for it right now. Just a matter of waiting to see what happens. We have to test this 200 EMA. If it holds and find resistance, then it's probably more down. If it breaks above that, then we're probably going to fill this gap up here.
Yeah, the main thing that's pushing Tesla today is European gas station and convenience store operator EG Group is buying Tesla supercharger equipment to begin offering at their gas station. So that is part of the excitement there. A little news around India potentially lowering tariffs on Tesla. However, the car market there is pretty small overall at this point in time. It definitely has potential to grow in the future. But those are some of the things there. I wonder, as we get closer to the end of November, are we going to get the Cybertruck delivered as expected? That was what they claimed, was that, end of November, we'd start seeing Cybertrucks being released to the people who put that $100 deposit on. I remember I got someone I know who put that $100 deposit down like 4 years ago and is now like, I don't even know what to do. And I'm like, yeah, good fucking luck. For a lot lower. Good luck with that truck. Or you just, eat that $100 deposit if you don't want to pay the interest rates now compared to the vehicle you got previously. So that is going to be something I wonder.
Bull market things.
Honestly, I'm just now thinking about that. It's like, okay, you were able to put this $100 deposit on a Cybertruck back in like early 2020 or like late 2019, I think. That's back when rates were a lot lower.
Oh, yeah.
How many people who had put that down had a different vehicle for the time being, and they're like, you know what? I can't afford to buy this Cybertruck and be paying these ridiculous interest rates. So I'm just going to have to eat that $100. And all of a sudden, is Tesla going to have, are they going to come in way under expectation of trucks that are actually being bought, and how could that impact the Q4 earnings? I'm just kind of like, this is kind of like a stream of consciousness thing we got going on right here. But that, I haven't even thought about that until now, and I'm wondering if that is priced in at all, or if that even matters. Honestly, I have no idea.
I do think that the $100 is refundable if you choose not to go with it. I think I was looking at it too back in like 2020, 2019. I'm not stupid enough to sign up for it because I was like, I don't really want to buy a fucking $1,000 truck right off the bat. But I was like, it's, if you want to put $100 down, and then if your number gets called and you don't want the truck anymore, I mean, it's not a terrible deal. You just have your spot in line. But I think that was very much a bull market thing where everyone thought that they're going to be rich as fuck by that time. And clearly the landscape has changed significantly. So I'm really interested to see how that plays out too. I also saw that you can't resell the damn thing within a year of buying it. You have to notify Tesla so that they just don't want people like scalping these things. That's why. So you have to like notify Tesla so they can transfer the information over. And it's really interesting. I was reading on Twitter today about it, and I was like, wow. I guess
just took a whole new turn when it comes to flipping mid 5-figure vehicles.
Yeah. So I mean, it's pretty interesting. I think they were just anticipating there's gonna be a shortage of them, so they didn't want anyone making more money than they would, charging 75, 80,000 for a $60,000 truck. $20,000 profit. I don't know if that's most sensible, but some people will do shit like that. But yeah, so Tesla, I think there's a good chance that it could try and get a death crust rally. It's unfortunate if you're a bear, but that's just the nature of this market right now. We'll have to see how tomorrow is definitely going to be a huge impact on how these individual stocks do react, I think.
All right, let's take a look at the dollar. We saw it get up to, almost 107 last month. Right now, we've seen it pull back as we're entering, this kind of pivotal point in the markets where they don't know if they want to keep breaking upwards and get through resistance. Like we saw the S&P got through 4,400 and is now, it's reapproaching potential yearly highs. High this year for S&P on the monthly was around 45.90, just came shy of 46. NASDAQ, once again, similar situation, near yearly highs of 1575, not quite 16K. So we're seeing those equities continue to trend back up after 3 straight down months. What else on the charts? We got the dollar right there. Let's talk about that one, then we can get into some crypto.
Yeah, absolutely. So you made a great point with a lot of these equities just going up like crazy recently, right? And again, it's not too far off from yearly highs. And to be honest, it's not that far off from all-time highs, right? We've seen a lot of all-time highs. As a matter of fact, just last week, I believe it was Marsh McLennan, one stock that just has never seen downside in its life. We talked about that in the past. We've also saw that Microsoft hit all-time highs, and a lot of other ones are very close to it. So it's really interesting to see where we are. So I think it's possible we could still get a bit of a rally that would bring max euphoria into the markets. Maybe we sell from the top there. Who knows? It's a matter of time. But again, I'm not denying any of the economic indicators that we are looking at, the dollar being one of them, right? So if we're looking at the stock market and equities, putting in these patterns, these bull flags, I mean, I could also say that we're putting one in here. Looks like we're breaking back into this one, if anything. And I mean, I could look this up larger and we could say that's the trend line, the mid trend line is where we're finding support. But we'll just keep it like this for right now. We're still on the 50 moving average right here on the daily. On the weekly, we can see that 200's down here around 104.284. And we're seeing that we're below resistance right now on this white trend line for 105.659, and we're just range bound in between here. The dollar hasn't really done anything except go down recently, right? And it's gone down pretty significantly compared to where we once were, 107.35. But if we look at this on the weekly, we can see that the dollar is coming down as well, right? So that tells us that we are getting a bit of a retracement. Where could that potentially land us if we get weekly closes? Or we're going to have to watch probably 104.2. This is a level that's, is 50 moving average. By the time this week closes, if it's not necessarily a great week, there's a good chance that we could see 104.156 find some support. We trade along it for a period of time before we decide to make any move to the upside. And again, we had a really good move to the downside from September of last year all the way to July of this year, and then we got a really good bounce. We have 14 weeks of just green nonstop up. Now we're finding a bit of retracement. The question is this a 5-way move to the downside, and we're waiting for our massive A, B, and then C kind of pushing us higher? We do know that the M2 money supply is contracting, so we also know that bank credit tightening is also occurring. So there is money leaving the system. The question is, does a dollar shortage cause people wanting to get back into the dollar? I did see that a lot of people are actually longing the DXY right now. I think that it's increased in the past few weeks. I think people are anticipating some type of, I would say, credit event. That's just the way I'll say it, but some type of event that causes the dollar to skyrocket. I honestly think that the dollar will still skyrocket because of something that we aren't accounting for right now. Again, I think that's also a reason why we saw gold pull back really significantly, but today, it's starting to buy back a little bit here. So I think that the dollar, we could just test this 104.128 if we start to lose this level of support. If we lose the daily support, that's possible. But I do think that, there is going to be a short squeeze on the dollar. And I think a lot of people that are shorting it here are maybe offside of this trade. It's just the weird thing is equities are going up and the dollar seems like people are bullish on that. So it's really interesting to see how people are positioned, anticipating something, not necessarily how the prices are moving in the given moment.
All right. Let's get into crypto. So we have this, this view of the dollar. What are we seeing on the crypto side of things? We have I was listening to a Bloomberg ETF show earlier, and they were talking about the, Ethereum and Bitcoin ETFs, the spot ones, and how there's this expectation in the crypto market that as soon as those things get approved, we're going straight to the moon. However, their expert on it was kind of discussing how he's not so certain with all of the advisors he talks to that people are just going to start piling money in, right? It may be a slower drip that goes into those ETFs. I wonder if, is the ETF stuff, the approval fully priced in right now, at least in the short term? If we get news that these are getting approved, is that going to be bullish short term, or is that going to be people with large holdings kind of sell that pump right there?
I'll give you a 5% window of error or room for any type of direction either way.
Margin of error, is that what you're looking for?
Yeah, I was thinking margin call, but I'm like, that is not the fucking term, and I'm not going to say that on here because I know what that means. But yeah, margin of error is what I was looking for. But I'll give you a 5% window on both sides of that, because I think that there is a good chance that we could still go to 40,000. Right? This is a really weird chart on the daily, and obviously we saw some massive pumps to the upside. We all know what this probably was. I don't think it was ETF news that got people excited, but I think the news is front running. That is the narrative for why the markets are pumping here. But I think we are seeing a 5-way move up And I think we're getting a bit of an overextension here in the fifth wave, right? So this means that we could push up, a bit higher. Looks like we're putting in lower highs right now on the daily, right? Lower highs and lower lows. It tends to break to the upside. If we look at this on the shorter time frame, the hourly, we're below the 50 moving average, probably going to test maybe this at 36,312. But it seems like we're staying in here for a good amount of time, right? We haven't been rejected from this area as of yet. Seems like we're starting to trade in this. This could be distribution. We'll take a look at why this could be distribution. But say the ETF gets approved this week and from current levels, 5% puts us roughly 38 to 39,000, I would say. Could it push to 40? Yeah, I think 40 is a reasonable assessment that we could be at $40,000 Bitcoin before any type of move to the downside does occur. Again, it really does depend on what these whales are doing. If they're distributing here, could they push the price up with a little bit of stables just to get people excited and think that, oh no, this is the rally. I need to buy in right now, otherwise I'm going to miss the train. There's a good chance that could happen, right? I think they've done a great job with playing with sentiment this entire time, making people believe that the ETF is the reason why the markets are pumping. I don't believe that's the case one bit. And again, I will show you why I think this. And that's, I showed you the weekly chart before we started, but this makes no sense to me whatsoever. And it still doesn't, no matter how much I look at this and try and make sense of it to see if I'm wrong about what's going on in this space, but I know I'm not. And it makes no sense that we got the mass volume the week of the banking collapse, the green candle, right, where we put in 27.17%, $5,975 in the price of Bitcoin shot up. And the volumes just dropped off significantly afterwards, right? And we never went to overbought again until recently. And when we're looking at the overbought territory, the volumes are absolutely non-existent, right? This is a joke how the peak of the volumes was that the banking collapse in Silicon Valley. And then even with how much money we've pushed in, this is what, 2,838 this week, 4,500 the following week, another $485, another 2,052. Like, this is significant gains that we saw in the month of October. It really was pumped over for different reasons we were anticipating, but this is not sustainable by any stretch of the imagination. So is it possible that we get the ETF, it gets excited, and then we see a mass sell-off from there? It's very possible. I saw CZ said that Bitcoin ETF means nothing for anyone outside of the US, and I kind of agree with the dirt bag. I was gonna say something else, but yeah, think about this right now with the halving and what the Bitcoin ETF means. Okay, the halving, there's less Bitcoin that's being mined, right? But at the same time, for how much supply needs to be mined versus how much is currently out there, in the grand scheme of things, it's not really that much. I believe it's we're seeing 1,000 Bitcoin mined per day. By the time the halving comes, it's 500 per day. There's already 19 million or so Bitcoin in circulation right now. What's another, a few, couple thousand every 2 weeks or something like that, 1,000 every 2 weeks. It's really interesting to see how that plays out. But I don't necessarily think that's the most bullish catalyst as we saw in years prior. But also, just think about this. People aren't necessarily, self-custodying Bitcoin. It's not necessarily adoption. It's just institutions that are buying it up and people have some exposure to it. I don't necessarily think that's going to be bullish long term. I think you're better off holding Bitcoin as opposed to holding, an ETF that has exposure to it. So it's going to be really interesting to see how that plays out. But I do think that is a buy the rumor, sell the news event, and we could be, tricking retail into believing that this thing is going to absolutely moon. I don't believe that one bit.
All right. Anything else on the crypto front as we begin to wrap up the day? We see.
Matic's having a great day, guys. I lost this bet. I admit it. I don't care, but I will go into one thing real quick before we head out here from these charts, right? So I'll look at TradFi in a second, and you just can go right through it and just see why we might see a bit of a pump. But I do want to pull this up, and this is why we are not getting the Bitcoin ETF approved unless they decide to change their tune on this. But this is from Bitfinex, great account, really good at finding information on Tether and a bunch of other fraudulent activity within crypto. And what we're seeing here, it's kind of hard to see, but this red box up here says all the reasons why the Bitcoin ETF was not approved, the one back in 2022. And it says for reasons 6 and 7, manipulative activity involving purported stablecoins, including Tether, and fraud and manipulation at Bitcoin trading platforms, right? It's really interesting.
Doesn't sound right.
A lot of people are going after Gary Gensler and they talk shit about the guy, But this is, I mean, it's pretty obvious why they're not approving this spot ETF. There's definitely, you can say whatever you want about Gary. I honestly think people are giving him a bit harder of a time right now against the reasons that he's providing. I think this is a really good reason why they're not approving the ETF. They don't want to give them any type of market share. It's also why CZ probably doesn't give two shits if they approve it or not. It just means that they're going to be buying up more that he can't manipulate as well as easily if he is doing that. I gotta put the air quotes there, but yeah, that's just a reason why we're not seeing this, and we could buy into these rumors every time Cointelegraph puts out some tweet, but I mean that's pretty much a given reason why they won't approve it. So that's what I'm seeing on that front. And the last thing I want to see here in TradFi, actually, I'm going to pull this up on the futures market. This is what I'm seeing, and this is why I think we could get an end of year rally. It's a bull channel. I mean, a bull flag right there, right? It's a parallel channel going down, lower lows and lower highs. We broke above it. The weird thing is we're extremely overbought on the daily, but if we look on the weekly, there is room for us to go up. So that's the concerning thing. This is why I'm saying that we could see an end of year rally. It could push up to 46 to 48. I think that would be max euphoria too for the markets. So we have to keep an eye on that. YM, which is the Dow, very similar parallel channel was breaking out of. We'll have to keep an eye on that. NQ for the NASDAQ. There we go. See, we're putting in these very similar channels on the daily. Yes, they're extremely overbought, right? They have to come down at some point, but that weekly is the concerning one. We have to see how things trade going into the next few days, into weeks. And the last thing we look at right here, just to see how volatility is performing, is the VVIX against the VIX. We could see that we had a pretty good red candle down earlier today on this. This is matching volatility versus, against the S&P. We can see that we came down to the 50 moving average, but at the end of the day, we're starting to close that gap. The VIX is coming down a little bit. The VIX had a better day earlier. This is one thing that's trying to avoid a death cross here. If this gets a death cross, that means it's probably going to come down and volatility is going to increase in the markets. But this isn't something you can necessarily do technical analysis with all the time. News is going to move this market, I think, more than technicals at this point. I think the sentiment is just too euphoric for anything to shatter its perception of what this market really is.
This market is up to some shenanigans, but we will leave that for another day. That is going to wrap it up for today's show. Stay safe out there, everybody. We got inflation report tomorrow morning. That's going to be quite the interesting start to the day, potentially. I will not be back tomorrow. I'll be here on Wednesday. Kevin and our buddy, Mr. House, will be steering the ship tomorrow. So hope everything goes well there. If you have not yet, do us a favor, like, subscribe, comment, share us out on social, all of that good stuff. Appreciate you being here with us today. Randy, as always, we appreciate you a ton. We'll be back tomorrow, Wednesday. The rest of the week should be a good one. But thank you, everybody. Have an awesome day, and we'll see you next time.
Take care, everyone.